All right. Hello, everyone. Tim Davis coming to you guys with another market review. Today is Saturday, February the 24th, 2024. And I'm going to start out this week by going straight to the indexes and taking a look at the S&P 500 first and foremost. I want to point out something here by looking at the weekly charts. I'm going to show you guys the weekly charts first, and then I'll probably try to bounce back and look at some in here and now. But I want to point out the weekly charts because with all of this exuberance in this market, a lot of people tend to just follow the exuberance and without taking a look at the bigger picture. And then when you don't take a look at the bigger picture, sometimes you can be setting yourself up for failure, thinking, we are going to continue in this line straight up without any kind of correction or pullback. But when you take a step back and look at the overall and the bigger picture from a technical analysis standpoint, you'll see what the daily charts and maybe the hourly and 4-hour charts may not be showing you as far as how overbought we really are. So we're going to start off by taking a look at some of the weekly charts on the major indexes first, and then we'll just bounce around from there. So what I want to point out right off the bat, we'll take a look at this S&P, and I want to highlight something here. So here's where we are at the S&P. Got as high as 51 or over 5,100 last week before we ran into some area of resistance up there. Now, what I want to highlight is something that the RSI is showing is starting to show on the weekly chart. Now, if it's showing us on a weekly chart, weekly charts, I tell you that when they get overboard, they out trump everything else. They out trump the hourly, the daily, 4-hour chart when they're starting to get super overbought or super over sold in an extreme way. And looking at this S&P 500 chart, we breached above 5,100, pulled back from there slightly a little bit. But what I want to point out is take a look at what RSI is showing us. We have an RSI reading now on the weekly chart, of 83. Overboughtness is when you get above 70. We are well above that, and it's continuing to go. It's like it's continuing to go much higher. Look at the extremeness of the overbought. If you look at the oscillators within RSI, it looks extremely high. Now, what I want to point out is get a trend line here and draw a trend line from this point here where we were overbought back in June of 2022 to where we are now. So we're just about even with that level now. And the last time when the oscillators got so overbought and price action started to, just warn you ahead of time that we were overbought. What happened during that time frame? Well, so if we look up here, we follow this move straight up. When we started to get overbought, and then we overbought, and we continue to be overbought, and then eventually, what happened? You see right there when we finally got so overbought, RSI was well over 80, and people were still piling in here. When we first got overbought, there was piling in, and all of a sudden, we got this big reversal time. And what happened during that time frame when we got that overbought, which was about 83, 84, 85. RSI reading about 83, 84, 85, somewhere around there. This is what happened. We started to trend lower. We trended lower. And that went on from about, from July, the end of July 2022 to October. So for a couple of months, we trended lower before we eventually got this bounce here. And started to trend back up. So could we be about to face that here soon? That is a huge possibility for us. That's why, when I start to see exuberance in NVIDIA and some of the other stocks that just running off to the races as we're about to approach probably towards the end of earnings season, Don't let that momentum fool you into thinking, okay, this is, we're in it. We're going to continue here from now on. Folks, nothing goes up in a straight line. It's always room for a pullback before we continue the next run. It has to it's almost like a trampoline. When you jump on a trampoline, and you only can go up so high until you come back down to reset for the next trampoline move higher. So same thing with the markets. You only go up so high before it finds somewhere to reset and pull back to a certain level before it trampolines higher. Now with the RSI and SPX being well over 80, approaching 85, and some stocks even around 90, as I'm gonna show you one here soon. That brings me more reason to be much more cautious and to try to find a way to preserve whatever gains I was able to get within this run. Find ways to reserve those gains, hold on to those gains, and start to be more cautious and even possibly protective by looking at some protective positions. Now, again, so we are showing weekly charts are definitely in overbought territory. We see an RSI well above 80. Look at the extremeness and the TTM squeeze. Very extreme to the upside. So is there time for cautious? I think it's a good reason to be a little cautious here. And if you look at you look at the way price action is trading, it's like we are hitting a level of resistance on the SPX on the weekly chart. That is a huge possibility. All right. So that's the weekly chart on the S&P 500. Just a quick glance at the daily chart. And one thing I'll point out here, as I pointed out last week, if you look at the RSI on the daily chart, it's actually it's creating lower highs. It is creating lower highs as we go up in price action. Hit a high point here and the oscillator pull back. Hit a lower high here and the oscillator pull back, and then we're hitting another lower high. When we continue to go higher, I think we start to pull back a little here. So while the market is creating higher highs, the oscillators and the RSI on the daily chart is creating lower highs. That's something else to be considerate about. So eventually, when you start to create these lower highs in the RSI, eventually price action will eventually follow. All right, that is the S&P 500. Let's take a look at the Dow Jones. Here's the Dow Jones, and if you look see how price action here, we got a nice gap up. We got a gap up here, then a nice gap up here, and form what's like a possible shooting star here. That's on the daily chart. All leads me to believe those are signs of possible reversals preparing itself. We switch back to a weekly chart. Again, look at the RSI. Look at the RSI. Big time overbought territory, showing an RSI reading of 86. 86. We are definitely in big time overbought area. Overbought territory. 86 on the weekly chart. The higher you go, the deeper you go into overbought territory. Normally, that is the more extreme the pullback would be. So keep that in mind. And we pretty much look at those candles right there. They are almost, side by side, almost side by side with this last week's candle, and just a little bit more higher. Folks, we are definitely in an area where we can start to see some type of pullback or mini correction here, right as we approach towards the end of earnings season. Now, if I was put a price target here, I would say our first level of the Dow Jones is a pullback right around that 38,000 level, 38,085, and then if we punch through that level, You can see price action come all the way back here, down here at 35.87. So right now, Dow Jones have breached 39,000. 39,282 was one of the extreme levels we got to last week. I do expect that we could see some type of pullback here soon. Let's look at the Dow. Let's jump straight to our NASDAQ. You look at the NASDAQ. And last NASDAQ is, and that's another one also that gave me cause for pause. I mean, a cause for a pause. NASDAQ has been struggling just to really hold that level above 16,000 level. 3 weeks in a row, it has not been able to hold the level above the 16,000 level. We've been stopping right there. So that leads me to believe that this is a topping pattern. We could be starting to head back down the other way. RSI here is just a 75, but still in overbought territory. And with some of those stocks that's been running like crazy, like NVIDIA, I'm gonna show you that one here in a second, leads me to believe that we're starting to get towards a near-term pullback. So markets are setting up for some type of pullback here. Here's a daily chart of the NASDAQ. Again, look at the RSI again here, as it has been creating these lower highs. Oscillators been creating these lower highs. Big move up there, big move up here, but not bigger than this one. Another move up here, but not bigger than that one, not higher than that one. So as the price action has been trying to gap up and continue to go up, the RSI oscillators and the RSI have been trending lower highs. Again, another sign of a market that is petering out at the top. That is the NASDAQ. Let's take a look at the Russell. Well, did we look at a NASDAQ daily weekly chart? I think we did. We did that one first. Yep. All right, let's go straight to the Russell. So 2000. Here's our Russell, and again, it is right around a level of resistance. It's been hovering around here for quite a bit. Looks like oscillators here and the RSI starting to trend lower as well. So all signs, folks, just point to a market that's reaching a top that it can barely go much higher. It's having a problem really breaking out in a big way higher than these levels. So could we be in store for a pullback? A meaningful pullback? Yes, that is a possibility. Possibility. All right. Let's take a look at the SPXA 200R, which is the tool that tracks the percentage of stocks trading above the 200-day moving average. And as you can see here, we've pretty much been stuck in a range here. We've been stuck in this range here. Been in this area here for quite some time. That's what the daily chart looks like. Look at the weekly chart. As you can see, the percentages say 80 has been like it's been the magic number. Been hard to breach this 80 level. Like we came back down below it here and started to consolidate here. It looks like it wants to try to go higher, but I think 80 is going to be a strong level of resistance. And if we find a way to push up a little bit more next week and get to that level, I think we could see an extreme reversal. So be paying close attention to this tool too, and see if we can get the percentage to well above 80. If we can get well above 80, it will be great. But if we don't get above 80, we can start to see a major shift in this momentum tool, which will also bleed over into the overall markets. All right, that's a look at that tool. Now let's take a look at the VIX. And the VIX weekly chart is showing the opposite. So like before, the VIX gets down here to this to this level down here. When you see this lower trend line, it normally consolidates around here, and then eventually it finds a way to horseshoe its way back up, and then come right back down. Came back down to this level from October to now, and now it's like it may be in the store for the same type of move that we got here. All right, so that's what we're looking forward to see if the VIX can continue to hold support down here and just start to creep back up like we did here, like we did here. Anytime we got to a level of support and found a good way to bounce. Support levels. Could we be about to have this bounce? That is a huge possibility. Let's look at the weekly chart. Let's glance at a VIX daily chart. VIX daily chart, look at this gap. So there was a big gap down in the VIX here. 9 times out of 10, when you see gaps in the VIX, they normally always fill eventually. So we had a gap up here, and then we have a gap down here. Gap up, we pull back, fill that gap, and it looks like we are hinging on a possible continuation to the downside, but we have support down here. So we're going to see what happens with the VIX. I think we're going to get some type of snapback here in the VIX eventually to come up and fill this gap. Then once we fill this gap here, do we continue to go higher back up to 18? I believe that is a possibility, folks. That's a possibility. All right. Let's take a look at a couple more things. Let's take a look at crude oil. All right, crude also, this is a daily chart. It shows possible signs of a possible candle that could be a sign of reversal. We got to wait and see, but it's hovering right around this 10% moving average. Could that be a level of support? Could we be holding this level? We have to wait and see how next week starts to trade. If we do see another red candle starting on Monday, then this could be a continuation pattern lower. We have to wait and see how that pans out. I always like to see confirmation whenever we get a big red candle or a big green candle. I want to see confirmation on the next trading day. Let's take a look at it, glance at a weekly chart of crude, because that looks a little bit different from what the daily looks like. Here's a weekly chart of crude. Weekly chart show it looks like this 10% moving average is acting as a possible level of support. Down, and price finally got above it here. And now it's like we are trying to rest here. So could we pull back a little bit more to this moving average and bounce? That is a huge possibility. So I'll be watching that. If crude goes just a little bit lower, right above 75, will be an ultimate level of support, much lower level of support. Could we bounce to that level? That is a possibility, because it looks like what crude is attempting to do is something that the VIX is attempting to do. Around it, bottom here, formation of a possible continuation higher. So we have to wait and see. There's a possibility again for crude that we can get a bounce just below this, around the 76 level. If we don't get a bounce, we break below 75, then we could be headed back down to the lower part of that range, or a lower part of this cup area, and back down to the bottom, to the base of it. So to wait and see. Again, if we get a bounce around the 76, it could be an extreme bounce. If we get a move above these candles here, which is right around 70, 79, then we can start to see crude really take off to the upside. All right, folks. One more thing we want to take a look at. So show you guys some of the how extremely overbought some of these stocks are starting to get. Let's take a look at NVIDIA, of course, the one that everybody's riding to the moon, and they think that it's off to the races from here on. We're going to continue this line straight up in a straight line and never come back and never pull back. I'm not a believer of that. I do think NVIDIA is a strong stock and that it has a good long-term future. But again, as I tell everybody, nothing goes up in a straight line. We've been going up in a straight line for quite a bit, but nothing stays in that straight line for eternity. We've been in a straight line since the end of last year. It's about December. We've been just heading straight up. Look at the RSI. Our RSI reading of 95. Folks, the highest you can get is 100. I've never seen any RSI get up to 100. And then the ones that get closer to get to that level, the harder to fall. So with RSI rating of almost 95 in NVIDIA, I'm almost sure that it's going to find some type of correction at some point. And when it falls, it's going to catch a lot of bulls by the horn, because those folks who've been jumping in at the top are going to be hurt the most. From levels for NVIDIA, let's mark that off. Let's do that by starting looking at a daily chart. There was a gap up here in NVIDIA. That is definitely an area that you can see a level pull back to. So that's around 716, around 720. We could pull back to fill that gap. That will put price action right back down towards the moving average. Let's see how we got away from the moving average on a daily. You can see it come all the way back down here, folks. To the bottom of this candle here also is a level. It's around 747. All right. Then we break back below that. Here is a level here as well, where we got a gap up at. That is around 663. So do I expect a pullback in NVIDIA? I truly do. Look at the RSI too on this daily chart. Look at our RSI's performing, folks. It's not performing as well as you may think. It too is starting to show these lower highs. Look at that. That gap up. Look, RSI didn't even break above these levels here. Only went up to that much, and then it's starting to hinge lower. So I think next week is going to be a telltale sign of what these markets do. And I think the market's going to do whatever NVIDIA tells us to do. If the NVIDIA starts to pull back, starts to hit some of these support levels, we can start to see the market do the same. All right, folks. Hopefully this is some news that you can use. Be careful, trade cautiously. We are definitely in areas where we could see a possible pullback that could hurt some of these late jump-in bulls who think this market is not pulling back today or tomorrow, but it's going to continue much higher for the rest of the year in a straight line up. I beg to differ. I think we'll see some type of correction. Okay. All right, folks. Hopefully it's something you guys can use, and I'll check you guys out on the next video.